Let's take a look at a real estate financial model from Tilt Analytics. This example is a mixed-use development project, commercial and residential. If you wanted only the residential version or the commercial only, I could send that to you as well. Your logo would be on the front page here instead of mine. The name of the project, summary details of the project. We're going to look at the output sheets, and we're going to look then at the input sheet. You'll see this is a highly functional model that also allows, if you need it, for exiting out of certain segments at different times than other segments. So the first sheet we're going to look at is table of contents. This is hyperlinks to all the sheets in the model. I can link to the chart summary, a nice visual dashboard. There's actually 4 different deal summaries in this tool because different clients like to see different information on their deal summaries: project costs, construction loan, returns, operating cash flow. Other deal summaries are set up a little differently, and I could customize a deal summary for your preferences as well. There's an LP cash flow summary sheet showing the LPs what they care about: the cash in, non-cash contributions if that's relevant, preferred return, return of capital, distributions, returns. You can also see the information quarterly over here if you like. There's a different layout of the investor return summary. You can also discuss with potential investors specific dollar amounts, hypothetical of what they might put in, and you can see returns based upon that figure. Nice uses and sources here. Doing these correctly can actually get complicated. The model will show you annual, and if I scroll to the right, I can see all the uses and sources monthly as well. Quick operating summary, quite useful, just showing revenues, expenses, NOI, return on cost, debt service coverage ratio, yield. This cash summary is a look at your whole project on one page. It's all your cash in green over all of your cash out. This is great to just see the flow of funds. I can also see the information quarterly as well if I scroll to the right instead of annually, and I can scroll to the right again and see all the information monthly. There's a summary analysis. The logic here is that from the inherent returns of the project, you need to provide the providers of debt and equity profit for their investment. And so that is broken out on this sheet. You'll also notice that several of the sheets have a disclaimer here. This disclaimer will have your company name in it and is a protection against liability to some extent. Cash flow from operations summary. Again, you can see annually and then monthly if you like. Commercial, residential, debt service. Non-operating cash flow showing the breakdown to get down to how much money is available for returns to investors. Uses and sources after the development. Summary, revenues and expenses. You can see per unit, per square foot. Breakdown of the commercial tenants, summary commercial P&L showing your growth rates at the top, vacancies, concessions, bad debt, summary line items of the P&L. I can also go over to the detailed P&L and see the same information tenant by tenant. And I can have the same sheets for all the residential as well. And then a summary for the mixed use, the combined P&L. Debt amortization table in each year. Details on the project cost, soft cost, hard cost, and so forth, quarterly. A shareholder summary sheet showing individual shareholders with their returns. Now we get into some of the useful sensitivity tables showing what ifs, and you have your base case on rent levels, and this sheet looks at, well, what if your rents are some percentage less or some percentage greater than what you project in the model? How does that affect LP cash returns? Similarly, we have an exit sensitivity sheet here showing what if you exit in different years. And the usefulness of this is largely showing the fact that the LP IRR and the LP multiple typically move in opposite directions with changes to the exit year. So certain investors might prefer a higher IRR. Other investors say, just show me the cash, and they want to see a high multiple. And so this can be helpful. You have other sensitivities on exit cap rates versus projected rents, and you can select in the middle. So this is a two-way matrix showing change to rents from projected, change on the cap rates. You can change the incremental number of bips on the cap rate, for example, and I can see LP IRR in the table, or I could also select to see LP multiple or total GP cash returns in the table. You also have a sensitivity sheet for what if your hard costs are different percentages more or less than what you think it's going to be. A chart showing the LP cash flow. Their cash flow is down when they initially contribute, and then it starts to rise back up as they get returns. This particular model shows jumpy returns because of the multi-segment exiting functionality that we're going to look at. A break-even chart showing in the yellow your cumulative development spend. The dotted line is including financing cost. The green is the total returns in the project. NOI versus debt service, very useful. Total ending cash balance if you exclude distributions to investors. Summary chart here of the square footage composition of the project. Summary chart of the development expenditure, and an NPV table. You also have some charts and tables on returns to the GP. These come last because typically you might not include these in the OM. So those are all the output sheets, except for this tax credit summary. Let's look at the input sheet. You'll notice that one of my goals in building this tool was first of all to present the output sheets to professional investors and look good. And the second primary aim here was creating inputs that are logical, laid out in an organized way and clear. And so all of the inputs have the blue highlighting for the input formatting. Every category has a heading, and all of the inputs can be hyperlinked. So if I'm in the middle of the model, I just I can just control home. I can be somewhere and I can control home, and I can hyperlink to the section I want to go to. So the first thing we tell the model is, okay, what about the property? What's the information on the property? Summary detail of the project. When does the project start? What's the unit information? So on the commercial side, I might have 3 different unit types, 10 units of each, 1,000 square foot per unit. And here's an important functionality. You can tell the model, okay, we're going to operate these units, commercial types 1 and 2, but commercial type 3 is going to be for sale. That is, we do not operate it, we develop and then we sell. So on the residential side, for example, you have the same functionality, and you might hold apartments for operating, but you might build townhomes for sale. On the revenues, you have options on how to tell the model your projections on revenues per square foot per year, per square foot per month, per unit per year, per unit per month. You have the same functionality on the residential side. On the triple net, though, you also have the option to indicate certain unit types are triple net or not. And you'll notice the grayed out cell. The grayed out is because these units are for sale, and so there is no triple net relevancy. You also have inputs for other revenues. In the residential side, for example, you might have parking and pet fee, and maybe 20% of your tenants are paying a pet fee, but the pet fee is $50. You can also have one-time fees at lease up. And so an application fee might be $100, and maybe you have 10% annual tenant flip on the residential side that you operate. Operating expenses, here too, the model is smart and tries to make your life easy. You can input different operating expenses with different projection methods per unit, per square foot, per year, and I could say, okay, I could also do percent of revenue, and you can also indicate that certain expenses are covered by triple net. So some expenses might be outside the realm of getting reimbursed, and here the model will match triple net expenses with your tenants that are triple net. You also, on the real estate, the residential side, you can indicate property taxes here, and you can have property tax abatement in each year. Note also that the units that are for sale, that are not for operating, you don't have operating expenses per se, but you might have holding costs. And so you can tell the model, okay, look, the townhomes are going to cost us 10 grand a year annually for just landscaping to keep them up until we exit all of them. And you can also select per square foot or per unit, and the model will run these expenses until you sell all of the units. So you also have year-by-year inputs for growth rates on rents, other revenues, and operating expenses for both the commercial and the residential. Similarly, I can input year-by-year vacancies, concessions, bad debt for the commercial and the residential. You can see the outcomes in the table below. You've got key metrics on the inputs all along. You can input a GP asset management fee that is based on either NOI or revenue. Here we tell the model about the development phases and the timing. So you might have a pre-development and a construction phase if it's simple. You could have 18 months for pre-development, 6 months for construction. The model knows based on when you start, it knows the dates of your different phases. You would also tell the model on the operated units, when do they start leasing up? And on the for sale units, when do you start incurring holding costs? And so you see here we have our unit types, the indicated purpose, operating or for sale. And here I can say, okay, in August of 2023, we start leasing up. It takes 3 months to lease up. Can do the same on the residential side. Here we tell the model about your land acquisition, what's the date, what's the amount. You have the option to do horizontal development inputs. You can say grading the land costs 50 grand and it starts with pre-development, so the model knows the timing of that expense. We also have inputs for construction costs, so you have a variety of ways of inputting the construction cost. You can do per square foot, per unit, a dollar total. I could also do a draw schedule. I could say, okay, draw schedule, this section down here comes alive, here's a costs $100, and the date that it comes in could be, April of 2023. So if I go here, I go back to dollar total, $5 million total hard cost. I can also indicate TIs per tenant or per unit type. Same thing on the residential. The soft costs are set up very smart. You can input your soft costs, the cost of them, the dollar figure, and tell the model what phases does the cost run from. So this one here might, legal might go from pre-development through the whole project, through the end of construction. And if you happen not to want to use the phases, you can also input a specific date if you prefer. You also can have soft costs that are based on a percent of say, hard costs, or a percent of land hard costs and soft costs, or a percent of total project costs. You have contingencies. You can have GP fees that are accrued during development but are not paid in cash. They get the GP more equity in the deal. There's a section on tax credits that I won't get into. You can input a land loan, the construction loan. You can tell the model how much is the construction loan amount in a couple of different ways. You can also have here your interest rate. You can have 2 different kinds of loan reserve that you have to kick in. You can do Mezz debt if you like. You can tell the model, okay, should NOI, if you happen to start leasing up during development, can NOI contribute towards paying the loan interest, and can it contribute towards paying the development costs? Same thing on exit proceeds if you happen to exit some of the segments while you're still developing others. The LPGP agreement, here you can indicate what portion of the total equity need does the GP put in. You can also raise additional equity from the LP for a reserve. Here's the exit inputs, and I could do exiting all the units at once, in which case this section here comes alive, but I'm going to show you the exiting the segments at different times, in which case this goes to sleep, this comes alive. On the commercial side, I can say unit type 1, I want to exit out in 2026. Type 2, I'm going to hold till 2028. And the for sale, I'm going to exit out right as I finish development. And so maybe those take 3 months to sell, all 10 of them, and the model knows the dates. You can input how do you want to value each of the unit types. The operated you might do with the cap rate, but the for sale you might do a dollar input, and you can say, okay, dollars per unit, or dollars total, or dollars per square foot. You get the total valuation on the exit per unit type. Input your closing cost, brokerage commission. The model also allows you to indicate how much of your net exit proceeds do you want to make available for paying down debt at the time of the exit. Same way on the residential, works exactly the same. And then we have our uses and sources. Nice breakdown here of all of the project costs that the bank will lend toward, and then you have other capital need items. Sources in the form of debt, NOI, exit proceeds, other sources of capital, grants, mezz debt, etc. You at the end of the development period, you can convert to a mini perm, or you can just straight out refi. You can do the mini perm first and then refi. You can do 2 other refinances on top of that. And so there's just tons of functionality in this model. A summary of the revenues and expenses here. The last section to input is the LPGP agreement. You can input a preferred return, you can do a waterfall, or you could do straight equity splits of a certain fixed percentage if you like. The fixed percentage is here. Input your percent. This comes alive. If I want to do the waterfall, we see here here's your waterfall tiers, and then your summary distributions. And then lastly, you can indicate, if you like, individual investor names and how much they put in. You can even have them put in non-cash contributions for, say, donating the land or contributing architectural services, that sort of thing. But once you've gotten this far, you're done. And so that's an overview of the mixed-use development model. You can reach me to discuss further. I'm at tiltanalytics@gmail.com. The website is tiltanalytics.com. And thanks for watching.